Hi, Wednesday, August 10th, 2016. Maneko 64 here, home of alternative economics and contrarian views. I want to cover gold and silver market this morning. It's just before 8 a.m. London or before 3 a.m. New York. So what's happening now could completely change from now until 8:20 a.m. New York when COMEX opens in New York or Chicago. So gold doing quite well here, up 1% at 13.54 or about $14. Silver is trading 2025 spot silver up 40 cents or up 2%. So we had the non-farm payroll number last Friday, the U.S. job data, and gold and silver were hammered, but not that much. Having been following this market for over 12 years, gold and silver, and having worked in the city and knowing how the precious metals react to jobs data, especially so-called positive jobs data, it's a good sign that we're actually rebounding so quickly. In the past, you would have seen gold keep going down. So this is a pretty good sign. So right now, gold 1355. We are still off, important technical levels. I think prior to non-farm, we got up to around 1366. That seemed to be really important resistance. Silver still needs to break through 2115. That was the high from the beginning of July. So very interesting markets. The rest of the markets I won't really touch upon right now. The other thing I wanted to talk about is paper gold and also paper silver, of course. I watched a video yesterday sent to my email by Jim Rickards of Agora Financial. You probably know Jim Rickards. He's the author of The Death of Money, Currency Wars, The New Case for Gold. And he was in Switzerland earlier this summer, and he met a very well-connected individual in the gold market in Switzerland. Switzerland is the biggest, is at the core of the physical gold market. They're the biggest refiners of gold, and they've been at the center of the flow of gold from the west to the east these last few years. So let's say the bullion banks in London sell gold, physical gold, and then they have to deliver it to China. That gold goes through Switzerland, where they melt, the 400-ounce bars, good delivery LBMA physical gold, and they turn it into 999 1 kilogram bars, because the Chinese standard is 1 kilogram bars. And this guy's been in the industry for over 30 years. And he said that recently in the East, demand has kind of slowed down a bit, but it's kind of picked up from the West, which is unusual. The US and Europe are buying physical gold. But he said he hasn't seen the gold market, the physical gold market, not paper gold, being as tight as this in 30 plus years. And he thinks it's only a matter of time, when things hot up, if the East and the West demand physical gold at the same time. He sees a surge in the price of gold in order to clear that demand. He, was talking to Jim Rickards about how the price hasn't gone up as much, even though there's so much tightness in the market. And the reason why, and a lot of you will know this, is because of the paper gold market. He says this gold guy in Switzerland, they were on a boat in Lake Zurich, and because it's this guy's quite important in the gold market, and he didn't want to be seen. So his image was blurred, and they were out on a hired boat to talk about these things. He was an American. You could tell by the accent, I think. And he was saying that, most people think they own gold, but they don't. GLD or ETF is not gold because there's a contractual, it's a contract. Gold futures are not gold. Unallocated gold with the LBMA is not gold. OTC gold is not gold, So he was saying he thinks at least 95 to 99% of people who think they have gold actually have a paper claim. And Jim Rickards, having been a lawyer on Wall Street and an investment advisor, says he's read all the contracts on the COMEX, LBMA, everything. And were the gold market and silver market to really squeeze higher due to physical demand, people who thought they had gold, they're just going to get like cash, and it will be the day before gold went up, $500 or something. There will be force majeure, which is a legal term for saying, for breaking a contract. That's what they could do. So very interesting video. I can't really put a link to that video for you guys because it was sent to my email and only I could open it. Yeah, the Swiss guru, so to speak, in Switzerland thinks it's not a matter if this is going to happen. It's only a matter of when. We can't say when, and anything could trigger that. So as you see, the LBMA, which is the physical market in London, supposedly physical market, is a highly leveraged market. In London, you can rehypothecate or hypothecate assets many times over. There's no limit. And what that means is that if a bullion bank has an ounce of gold, they can actually lend out 100 ounces or 200 ounces on the back of that gold to anyone, and that person can take that gold and sell it into the market. So in the US, there's a limit to hypothecation. So that's why the gold market is so big in London, because all the central banks can rehypothecate to their heart's desire in order to control the price. But according to this Swiss guru, things are changing, and this game won't be able to continue unless the price of gold goes higher. So very interesting video. Good to see gold and silver come up so quickly after the trashing they got after non-farm payroll. It's a good sign. So the key levels to watch are going to be 1366 and then 1375 in gold. And silver still 21 to 2150. Technical picture still looking pretty good. Bitcoin, for my viewers who follow a lot Bitcoin, it's still stuck below 600 here. It's 585. So that's it for now. If you enjoy my videos, please like, share, and subscribe. You can also donate. I've got a few links below to PayPal. I've got my Bitcoin address and the link to Patreon. Take care. Bye.